It's Market Day Report. We're glad you're with us, starting another trading session. We've been trading now for a little over 45 minutes. Let's start with the corn market. Now, corn finished the session lower yesterday, so that's two straight losses in the corn market. Now, we start in higher territory, and actually it started building higher in the overnight session. December, 488 and a quarter. That's a penny 3/4 higher. We're just focused right now on the new crop contracts for all of these. So November beans at 1147 and a half. That's a penny higher. And the wheat market, July, Chicago, penny and a half lower, 598 and a half. It's lost that 6 handle. What about hard red? Well, July, 618 is down 1 tick. And let's go to the cotton market. December here is the new crop, 71.80, and it's down 4. And let's go to the phone. That's where we find Chris Swift, Swift Trading. All right, Chris, that's the trend right now. What are you watching here?
Well, we're still watching the energy markets, Tony, because that tends to be an influence on all other commodity markets, and we're back up higher again, a little over $3.50 in the crude oil, 20 cents now in the diesel, and that's where I think our strength is coming in, primarily in the bean oil, and then that's helping to firm up the beans. And then even gasoline, another 12 cents higher this morning. That's our ethanol. So I believe that we're going to see the grain markets, especially corn and soybeans, continue to firm simply because they're a component of energy, and energy hasn't stopped going down yet.
Yeah, and nat gas has been lower 2 straight sessions, but it's moving higher. And then crude, Brent crude, looking at the global trade here, is moving higher as well. Chris, I'm just kind of curious, though. You brought in the whole biofuels thing. Do we need to keep an eye on what's coming out of D.C. this week?
Absolutely. Those could be some of the most crucial events that we have seen in the grain markets for this year. If they increase those mandates to them, I believe bean oil, soybeans will probably get a lion's share of that. We already kind of know what we need in the ethanol. We want that E15. Not sure if we're going to get that or not, but if we do, that would be a good boost for the corn too. But right now, our issue at hand is diesel fuel, because that's what's running our military operations, and we're fixing to plant over 180 million acres of corn and beans in the ground. We're going to really need diesel fuel. So specifically look more towards it, at least until we get through planting and maybe a little bit of reduction in the military actions. So then we might see it settle down. But until then, bean oil is in a really big bull market. It's congested over the last 2 weeks, and we're starting out the day higher in bean oil.
All right, Chris, before we go to break here, I had a chance to talk yesterday with Randy Feenstra, representative from Iowa, member of the House Ag Committee, and also kind of the chairman. I don't know if you remember, but the year-round E15 kind of fell apart in Congress at the last minute at the Rules Committee. And Feenstra is chairing that group trying to come up with a solution, and told me yesterday that they're very, very close. They're having to work not just big oil, quote unquote, and farmers. It involves refiners, small, medium, and large refiners as well, getting everybody at the table. He says they're close. That could be a positive for this market. Chris Swift is with Swift Trading. Quick break here. We're back to talk livestock futures with Mr. Swift. Market Day Report continues in a moment. So we've got the cattle on feed report out of the way. That came out last Friday, but we have a couple of reports this week affecting livestock markets. The first one comes out tomorrow at 3 p.m., and that is our cold storage report. Actually, that's out today, 3 p.m. today. Then coming up on Thursday, we've got the quarterly hogs and pigs report. That comes out Thursday at 3 p.m. So a couple of reports. Speaking of hogs, how about lean hogs right now? Nickel lower front month April at 90.75. This is a pretty tight trade range here. Roll out to the July contract. Our trade range is about 90 cents. and we're trading at 105.82 near the bottom. That's 70 cents lower on a market that's finished lower now for the last 3 sessions. Over to the feeders. Feeders have been higher 2 straight sessions, and the March contract firming up to 359.80. That's $1.35 higher and set to expire next week, April. A little more active here at 353.10. It's up 62. And again, trend here is higher trade for the cattle market. And we say that except for live cattle now pulling back at 234.82 on the April. It's down 47.70 lower on June. So what's happening? A little bit of a disconnect between live cattle and feeder cattle. Chris Swift, Swift Trading. What's happening?
Tony, I'll tell you what I see in there is that the current events are not making anything bullish for the U.S. economy. It's not making anything bullish for the consumer, and it's clearly not making anything bullish for beef. And the only thing that I can see out there is the basis spread. So, in my opinion, the reason that the futures markets are up a little bit is because the index has not dropped. Cattlemen are still bullish cattle. The rest of everything else, whether it be the world or the consumer or the economy, is being impacted by extremely high fuel prices, interest rates that have shot up immensely, and now an economy that is in a war-type scenario that there is no telling what might happen, and yet we continue to see our producers bid higher for inventory. So, in my opinion, you said the very first thing right off the bat, there's a disconnect, and I'm not real sure how it will be connected again, but it'll either be a resolve of the military actions and maybe the economy improves and the consumer improves, or potentially it could be that this economic situation continues, and unfortunately we just can't pay this high price for cattle.
Yeah, good points there. Chris, great to hear from you. Wish you were in the studio with us. We'll see you next week. Chris Swift with Swift Trading.